Good evening, everyone. Welcome back to this discussion on audit. So, in the previous session, we were discussing about audit planning, audit strategy, audit program. So, today we'll just do a quick revision of whatever we have discussed so far in terms of this audit planning. And then we'll also plan to start the new chapter, chapter 3. Okay, quite important in terms of various aspects of the audit. Yeah, so quickly, what I'll do is I'll just take you to one case scenario. We'll just try to revise some of the things with the help of that case scenario. Okay, and once we are through with that, then we'll just look at some more points. Okay, so suggest if you can just look at this case study, or if you want to refer the study material, you can just go and look into the study material also. So it is page number 2.26. Okay, so if you want to refer the study material, you can also refer that. Yeah, and this case scenario we are going to discuss, and on the basis of this, the questions that are going to follow, you need to answer that. So please go through this case scenario carefully. Okay, so Kaur and Associates, a sole proprietor firm of Simran Kaur, is offered appointment as auditor of a company engaged in manufacturing of automobile components for the first time. She is fact-checking about the integrity of promoters of the company and other key managerial personnel. Matters such as competence of staff to perform the engagement are also considered by her. The appointment is subsequently accepted. So it's like some sort of evaluation was done by the auditor, and then the engagement was accepted. Okay. Then she is also taking into account number and location of branches of the company, requirements of Schedule 3. Schedule 3 is in respect of the format of the financial statements, and the expected time by which audit has to be completed, keeping in view the requirements. Initially, she has thought it proper to inquire key employees of the company in procurement and marketing departments, and she also planned for this. So she thought that she will make inquiries from the client personnel, and which team she is going to involve: procurement and the marketing department. So that was the initial plan. She has also planned to visit 3 plants of the company. The purpose of planned inquiry and the visit is to identify and assess the risk. Okay, so she wanted to find out if there are any risks in relation to the financial statements of. A detailed set of instructions has been prepared by her office, means her team has prepared a detailed set of instructions. Instructions means the questions, etc. And it's been handed over to assistants in the engagement team. Okay, so now in the engagement team, the detailed set of instructions has been passed on. Okay, means whichever person is required to do whichever sort of activity in relation to the audit. These set of instructions include details of extent of checking and nature of audit procedures to be performed regarding purchases, sales, items of income, items of expenditure, etc. During the course of execution of above set of instructions, means if let's suppose any procedure was conveyed to her, okay, so the team member will execute that. It's been brought to her notice that the company is also producing substantial quantities of scrap generated during the manufacturing process. Okay, so over and above the manufacturing of automobile components, so there is one product which is automobile components. A lot of scrap gets generated. Okay. However, no instructions have been given to the engagement team in relation to this generation of scrap. All right. Yeah. So this is the fact pattern. I'm just hoping the fact pattern is clear to everyone. Yeah, quickly. I'm just hoping that this fact pattern case scenario is clear to everyone. Great. Okay. So if you are confirming, it's great. All right. So now Let's move on to the questions which are based on this. Now you need to answer this. Auditor is fact checking about the promoters. If you remember the first para. Okay. So auditor was fact checking about promoters, KMPs. She is also considering the competence of staff of the company to perform engagement. Now, in this case, when she is checking this, what do you think is being checked? Okay. Or what will you call this audit procedure as? Should we say it's the audit strategy? Should we say it's a preliminary engagement activity? Should we say it's about designing the audit plan? Means overall plan? Or should we say that she is complying with ethical requirements? What are your thoughts? Quickly, huh? What are your thoughts? Okay, great. So I think everyone is saying it should be B. Yeah, Ajay Surya, Dipali, Pallavi, everyone is saying it should be B. Very good. So now in relation to this background checking, okay, so when the auditor is checking the background of the client, what do you call it as? Before accepting the engagement, if the auditor is checking about the company, that's a preliminary activity. That's a preliminary activity which the auditor is performing. Okay, so because it's a preliminary activity, so that's why out of these categories, where should this fall? Of course, preliminary engagement activity. Should we say that it's a part of audit plan? The answer is yes. But amongst the audit plan, it's a specific thing. What is that specification? Preliminary engagement activity. Okay, yeah, so that's why whatever you have answered, option B is absolutely correct. Great. All right. So now let's move on to next question. Question number 2. Okay. Consideration of number of branches, location of branches, requirements of financial reporting framework, expected time of completion are the relevant factors. Okay. In relation to what? Should we say it's about developing the audit plan? Should we say it's about establishing the audit strategy? Should we say that it's about designing the audit program? Or should we say it's in relation to the risk assessment? So of course, you may say that this will fall under all, but very, very specifically, when this activity is being performed, out of these 4, which one will you say will this suit most? Vaishnavi says D. What about others? Quickly, huh? Quickly. What about others? Quickly. Yes. Okay. So I can see mixed responses. Okay. Tambeshwari is saying B. Meet is saying A. So there are a lot of A's. Yeah. There are a lot of B's. Pawan is saying C. Okay. So some are going with C. Manvi is also saying C. Bhaskar is also saying C. Ritika is saying it's about designing the audit program. Yeah. Subrata, Saundarya, they are saying it's B. All right. So let's try to understand this. Now see, whenever you come across such type of questions, wherein, as we discussed, that if you look at all of these options, they are not incorrect. Okay. They are not incorrect. But please understand, what does this question ask you? It says that which are the relevant factors, okay, specifically in relation to which activity will you attribute that? Or you can say that if you primarily go with these factors, so which activity is being considered? Which activity is being considered? So now, if the number of locations are looked at, number of branches are looked at, financial reporting framework is looked at, expected time of completion is looked at, all of these are in relation to what? Overall audit strategy. Overall audit strategy, because looking at these factors, audit strategy will be worked out. Yes or no? Yeah. So that's why the most suitable option out of these 4 will be option number B. Now, you may have a lot of questions and you may have confusions. But sir, should we not say that it's an audit plan? Of course, yes. Because audit strategy is also a part of audit plan. Some of you may think that doesn't it help in the audit program? Of course, yes. Because audit program is also a part of audit plan. But if you look at specifically that out of these four, all of these factors, where will this be mostly suitable? It has to be overall audit strategy. Understood? Yeah. All right. So now moving on to question number 3. Taking into account description of planned inquiry. Okay, so taking into account description of planned inquiry and visit, which of the following statements you will consider as correct? Yeah, so we'll have to read all the statements. 1. Planned inquiry and visit fall in the purview of audit strategy. Planned inquiry and visit are planned risk assessment procedures and they fall in the purview of audit plan. Said description is not related to audit planning, so it's not a part of audit planning. Planned inquiry and visit, they fall within the purview of audit program. So here again, so we have got 3 things: audit strategy, audit plan, and audit program. Or to say that it falls under neither of them. Okay. Now tell me, out of these 4, where do you think this will fit the most? Yes, quickly. I think I can see a lot of B's. Yeah, so, and many D also. Great. So I'm just not able to name some of you because I'm receiving a lot of responses. Sandro is saying D. Nan says D. Okay, great. Hasi is saying B. Pawan says D. So there are a lot of D's. There are a lot of D's, a lot of B's. So I think majority of your answers are B and D. Correct? So now let's try to evaluate this point also. See, when it comes to the planned inquiry and the visit, should we say that it's about the audit program? Of course, yes, it will fall in the purview of audit program. There is no doubt about it. And on the basis of this, audit strategy will also be worked out. There's no doubt about it. But please understand that planned inquiry and visit, are they not performed to assess the risk? The answer is yes. And should this not fall within the purview of audit plan? Of course, yes. Okay. So that's why we should say that this is mostly suitable for risk assessment. Now, risk assessment is one area that we are going to discuss in significant detail starting today. Okay. So if you still have some of the doubts, some of those doubts will automatically go away. Yeah. But to this, I would say the answer will be B. Okay. Answer will be B. Yeah. All right. So now moving further, next question. Question number 4. What is a detailed set of instructions which is given to assistants in the engagement team known as? I think this should be clear to everyone. And I'm just expecting same answer from everyone. Yeah. Hopefully, yeah. And I think this is exactly what I can see. Hardik says C. Tambeshwari says C. Okay, great. Sarvesh says C. Niru says C. Great. Satish is saying C. What about others? Yeah. Pranav says C. Okay, great. Sai is saying C. Mehak, Ruchi. I think this is quite clear to everyone. Neha, Ratimalini, they are all saying C. Very good. Avinash is also saying C. Great. All right. So moving on to last question. Okay. So this last question, issue of generation of scrap has been overlooked. Means this has not been captured in the detailed set of instructions which has been given to the engagement team. If you remember, similar type of question we discussed in the last session also. Now, in this case, What should be the proper course of action by the auditor? Now here again, we'll have to read all the options. Ignore this information as audit has already begun. Modify the earlier set of instructions. Leave the matter to the wisdom of the engagement team. Put the ball in the court of management as she was not provided with complete information earlier. I would say A and D are somewhat similar. A and D are somewhat similar. All right, great. So over to you. What do you think will be the right answer? And I can see everyone is giving the same response. It's B. Yeah, it's B. Great. So Pooja, I think Manvi, Anirudh, they are all saying it's B. Very good. Huh? So I think there's no doubt it has to be B, because if something has not been captured earlier, then our planning is a continuous process which needs revision. Okay. So if something has not been captured earlier, you need to capture it now. And how do you do that? You will have to modify the plan. You will have to incorporate this element in the set of instructions. Okay. We can't be rigid in terms of dealing with this. Okay. Yeah. Great. So now this was all about audit planning, audit strategy, audit program. Now, before we really move on to our next chapter, there's also one nice document which is available, and I thought I'll just maybe discuss that document with you, because I think a lot of questions are put across as around the notes, though the notes are also available to you in the form of presentation. But many a times at the time of exam, you may look for summaries. Okay. And you can just say a nice summary which may capture all of the relevant points in relation to a particular topic. Okay. So we have got this document, very nice document which you can just look at, and just a minute, let me just discuss this with you. Okay, just a minute. I'll just open this document now. Okay, so this is a document which is available on ICAI portal. This is called as Saransh. Okay. Now, in this document, if you look at, we have this auditing standard 300. Okay, but let's ignore the auditing standard number, etc. We don't need to get into that. Yeah, because I don't want to make it too technical for you or too complex for you. Idea is that whatever we have discussed in relation to planning, as you can see, okay, in this document, each and every auditing standard has been very nicely captured in a very summarized manner. Okay, so that's why if you require maybe a quick snapshot of a lot of things, a lot of points at a single place, okay, or maybe if you are looking for a quick revision, so this can really help you. Maybe you can just consider it. Okay, as I told you that this is available on the BOS knowledge portal, so you can just go access that. Currently the topic that we have discussed was about planning the audit. Okay, so in this relation, you can just see that each and every aspect has been captured over here as far as the planning and engagement is concerned. Okay, now similarly, all of the topics which are going to follow, they are all based on auditing standards that we are going to discuss. Yeah, so that's why for various other topics also, these summaries are available. Okay, so currently the summary which is in front of you is about the audit plan. But similarly, any other topic which you want to look at, which you want to just go through, you can just refer this document, and this is going to be quite helpful. Yeah, so maybe you can just consider that. So if you want to note down, so this is called as Saransh. Okay, and this is available on the BOS knowledge portal of ICAI. Right? Clear? Any questions so far? Any doubts? Any questions? Any doubts? Because now what we will do is we'll just move on to our next chapter. Just give me a minute. So just move to the presentation of the next chapter. All right, so now we will move on to the next chapter. Okay, so Chinmay is asking, sir, can you please send the notes and the assignment? Of course. See, the notes in the form of this presentation are already uploaded. So you can just go look at that. Fine. So all the things that we have discussed so far, it's already uploaded. Over and above that, as I just discussed with you, you have this document Saraj, which again, you can just go look at. Huh? So it's available online. You can just go download that at any point of time. Fine. Yeah. Then I think this next question comes from Hardik, and I'm sure, see, everyone will have this question. So this question says, sir, do we have to learn all the essays? See, as far as the auditing standard is concerned, if you are able to remember and quote the auditing standards, that will always look nice. That will always look nice. Okay. So if you can do that, that will always be better. But if you don't do that, if you understand the concept and if you don't look at too technical language, but you are able to explain everything. Okay. And I think I am answering your question, Vandana. See, if you are able to answer your question in a nice manner, covering all the aspects which are required and in a concise manner. Okay. Wherein, if you forget the auditing standard, if you forget the reference, that is okay. But if you can just top it up, that will always look nice. Okay. Yeah. So Ritika is asking about any specific answer format. See, there's no specific answer format as such. It's just that you have to be very, very clear and concise. Don't write too many stories. So that's what I'll request everyone to follow. Huh? Many a times, what do you do if you don't know anything? Or even if you, let's suppose, know anything, you'll just want to write stories. Try to avoid that. Let's try to be clear and concise. Okay, again, depending on the weightage of the question. All right. Great. So now we'll move on to our next topic, risk assessment and internal control. Okay, so if you look at this chapter, this is quite big, okay, quite lengthy chapter. And many of you may have thoughts that this chapter is quite difficult, okay, quite typical, too technical. Okay, many a times you may have this thought. I'm not sure whether you have this or not. Quickly, if you can just share your thoughts around this. Yeah, because many a times you have your thoughts because you may have spoken to your friends or maybe you've just looked at this document. Do you have this thought? Do you still carry such thought as around this chapter? Quickly, yeah? Yeah? Okay, VR says no. No. So great. So one more point as around the audit, which is very, very important and which you may have looked at so far is, see, as around the audit, whenever you get stuck, whenever you feel that this is too technical, I would say just try to look at the practical application of that particular point or that particular concept. Okay, similar to the way like we have been discussing, because we have discussed, and I'll just keep repeating this. I have also discussed this quite a few times, that audit is all about a practical subject. Okay, you should not consider this to be a more of a theory subject. Okay, because if you will try to look at the situations, look at the case scenarios, look at the practical situations based on the concept, then automatically some of the things which you may find too technical will become easier for you. Okay, so that's the same approach that we'll just plan to follow as around this topic also. Okay, now risk assessment and internal control. Now, as around this chapter, there are a lot of things we are going to cover. One, will discuss the meaning of risk. We'll discuss how do you assess risk. Briefly, we have discussed about assessment of risk in our previous sessions also. But in this chapter, there is something which we are going to discuss extensively. Then we'll also try to understand the meaning of controls. What are these controls? What are these internal controls? Okay. And of course, as around this complete risk assessment, what is going to be the role of the auditor? How is this really relevant to the auditor? Or how is this going to help the auditor? How is this going to impact the opinion which the auditor is required to provide? Okay, so some of those points are going to be answered when we are through with this chapter. Now, what I'll do is, before we really get on to our discussion in relation to some of the points that we are going to follow, I'll just try to discuss some of the terms, or you can say some of the definitions with you, because those terms are going to be extensively used during the course of this discussion in relation to this chapter. Okay, so let me just move on to that part first of all, and then I'll come back to this chapter as around this risk assessment, etc. All right, so what we'll do is we'll just look at one example, and with the help of that example, we'll just try to discuss some of the concepts, or you can say some of the terms. Now, say for a company, financial statements are required to be audited. Okay. Now, in a financial statements, what are the components? Can you tell me quickly? In a financial statements, what are the components? Quickly here, please. Okay, Meet says P&L. What about others? Then I think Vaishnavi says balance sheet. Yeah. Then I think Sarvesh says cash flow. Great. Great. So what I'll do is whatever you have spoken, I'll just write down. So one is balance sheet, P&L, cash flow, and notes. Okay. Now, as around the balance sheet, can you tell me what are the components or what are the items that you can see over there? Quickly, in case of a balance sheet, what are the items? Okay, Pranav says various assets, liabilities, and exactly this is the response from Aisha, Ritika, Rachna. Very good. Sarvesh has the same answer. Great. Dilip has the same answer. Great. Okay. Now, can you tell me some of the items that you get to see in case of P&L? In case of P&L. In case of P&L, I'm asking. So I think Satashi just answered that. Okay. Ranjita is answering about balance sheet. Okay. Pawan says expenses. Great. Then I think Shambhavi is saying income and expenses. Great. All right. So let me just try to put down some of these points. So we can say in case of balance sheet, there could be various assets, for example, PPE. Then there could be certain liabilities, for example, creditors. In case of P&L, there could be certain line items like sales, or there could be certain expenses, for example, salary. Correct? Yeah. All right. So now, when the auditor is appointed, can you tell me what is required to be audited? Quickly, huh? Some of you may be thinking, sir, these are two basic questions. Why are you asking these questions? You'll understand that this is important for us. So can you tell me, when the auditor is appointed, what is required to be audited? Great. Krishna says financial statements. Great. Now, when you say financial statements, it means that balance sheet is required to be audited, P&L is required to be audited, cash flow is required to be audited. Yeah. Notes to accounts are required to be audited. Yes or no? Yes or no? Can we say that? Yeah. And one bifurcation of financial statements that we have done is on the basis of components. Balance sheet, P&L, cash flow, they are all what? They are components. But there is another basis which you can follow in relation to the financial statements. What is that? That in the financial statements, there are four aspects that are required to be considered. Can you just name those? Anyone who can just help me with those four aspects which are required to be considered in relation to the financial statements? Quickly, huh? Let me just see who can answer that. Four aspects, four criterias which are required to be considered. Great. Saundarya says recognition. Very good. So I think there you are. And I think somebody just answered all the four. I am just missing out because I can see a lot of responses. Very good. So those four are recognition, measurement, presentation, and disclosure. Correct? Yeah. So in case of a financial statement, I think exactly this is the answer from Amit also. Yeah. So great. So we can say that the financial statements are required to be audited means all the components of financial statements are required to be audited, or it means that recognition criteria is required to be checked, measurement criteria is required to be checked, presentation is required to be checked, disclosures are required to be checked. Yes or no? So this is what we can say. Now, many a times, what may happen is that in relation to a particular line item, let me just pick up PPE. Okay. In relation to a particular line item, sometimes what you may try to do is you may just try to check this PPE. But whenever you try and get onto this audit or checking of PPE, you may want to look at that. What could be the problem in case of a PPE? Yes or no? So let's suppose if you are the auditor, you have been asked to verify PPE, examine PPE, audit PPE. So what is the first thing you will want to check? First thing will be that you will want to get onto the understanding of this PPE. You will want to understand the composition of this PPE. Yes or no? Now, let's suppose it includes plant and machinery, furniture and fixture, and various other items. The next question which will come to your mind will be that what can go wrong? What can go wrong in relation to this PPE? Yes or no? So let me just say, what can go wrong? So this is going to be the thought of the auditor every time. Will this not be the thought of the auditor? Yes or no? Quickly. So this is how auditor will think about it. Yes or no? That in case of PPE, maybe depreciation is incorrect as computed by the management. Yeah. Or the auditor may think that maybe some of the assets were purchased, but those were not recorded by the accountant. Or maybe plant and machinery was purchased, but that has been recorded as furniture and fixture. Yeah. Or maybe the disclosure of accounting policy in relation to PPE has not been given. Yes or no? Yeah. So these are some of the thoughts which will come to your mind. Yes or no? So that's how you will think whenever you will get onto the audit. Yes or no? Quickly tell me. Yes or no? So this is how you will think about it. And that's how you will want to design your audit procedures. Yeah. Great. Ajay Surya says yes. Great. So now, in relation to these thoughts or these points, or you can say the perspective of the auditor which is going to arise in relation to an account. Yeah. Now we need to understand that whether that is limited to a particular account balance or whether that will be in relation to financial statement as a whole. For example, if somebody is checking PPE, can we say that this person is looking at financial statements as a whole? Tell me quickly. Can we say that the person is looking at financial statements as a whole? Great. Dipali says no. Satish says no. Great. Uday says no. Very good. But in that case, we can very well say that person is looking at one account balance. Yes or no? One account balance. What is that account balance? PPE. Because that is how it's been recorded in the financial statement as one account. Or you can say one head. Correct? Now, for a PPE to be verified, let's think about two procedures. So the first procedure is wherein the auditor is checking whether the building has been recorded at right amount or not. Let's suppose building was purchased for rupees 5 crore. Now, what is it that the auditor wants to check? Whether the building has been recorded at 5 crore or not. Now, in this case, can you tell me what is the perspective of the auditor? What is it that he wants to check? Quickly, what is the perspective of the auditor? What is it that he wants to check? Pranav says value. Very good. Or we can say valuation. Or we can say valuation. Yeah. Anirudh says valuation. Very good. Great. Now let's suppose there's another point. There's another auditor. Okay. Or you can say there's another team member. Now during the year, laptops were purchased. Okay. 5 laptops were purchased by the company. But auditor has a doubt. Okay. He's thinking that maybe the laptops were purchased, but those were not physically received. Yes or no? This could be a doubt in the mind of auditor, or you can say this could be one of the what can go wrong. Yes or no? Yes or no? Tell me quickly, yes or no? Yeah? Great. Trisha says yes. Now, for checking this or for removing his doubt that whether the laptops were physically received by the company or not, can you tell me? Okay, great. There you are. So Ruchi has answered. Ruchi is saying, sir, for checking this, it's very simple. Auditors should go and physically verify that. Auditors should go and physically verify that. Can the auditor do that? Of course, yes, he can do that. But now, can you tell me that if this physical verification is carried out, what's the perspective which the auditor is looking at? What's the perspective which the auditor is looking at as around those laptops? Quickly, huh? What is it that the auditor just trying to look at? Tell me, is it the valuation? Is it the valuation? No. So Vaishnavi says, sir, it's about the existence. Pooja is also saying that over here, auditor is trying to check the existence. Existence. Okay. So now, in the first instance, let's suppose instead of building, laptop was purchased. Let's suppose instead of building, laptop was purchased and the auditor verified the purchase invoice. Auditor verified purchase invoice. Can we say that by verification of purchase invoice of the laptop, its existence can also be checked? Quickly, can you say that by verifying the purchase invoice, its existence can also be checked? Everyone says no. Very good. And for existence, auditor verified that laptop physically. Auditor verified that laptop physically. Now, can we say that by checking the existence, by verification of the existence, valuation of the laptop can also be checked? Can we say that? Can we say that by physically verifying its value can also be checked? Everyone says no. Yeah, of course. If you go physically verify something, how can you know about its value? Because its value can also only be verified from the invoice document. Yes or no? So that means there are various ways to check a particular line item. Now, what is the line item which is getting tested? Laptop. There's a line item which is getting tested. What is that line item? Laptop. And for laptop checking, there are two ways checking is done. There are two ways checking is done. Should we say that both the ways are important and required? Tell me. Should we say that both the ways are important and required? Everyone says yes. Now, these ways of checking something wherein either you are trying to check its valuation or you are trying to check its existence or you are trying to check both. What do you call these terms as? These are called as assertions. Okay, technically you call them as assertion. Now, many a times you have a question, sir, what do you mean by assertion? So this is what you mean by assertion. Assertion simply mean that for checking a particular line item, for checking a particular area, for checking a particular asset or a liability or revenue or expenses or anything in the financial statements, there could be various ways which are required. It could be either of them or all of them. Yeah, those ways or those perspectives are technically termed as assertion. Are you clear on the meaning of assertion, everyone? Yeah, that is what you call as assertion. Everyone clear on this? Yeah, because many a times you will have a question, sir, assertion is not understood. We don't know the meaning of assertion. I'm just hoping that now everyone is clear as to what do you mean by assertion. Now, please remember this term assertion is going to be repeatedly used as we move further during the course of our discussions. Okay. Now, moving on to the next item. So currently, we are just trying to look at some definitions. We're just trying to look at some definitions. So once we are through with that, after that, we'll pick up our relevant area. Okay, now the next item that is in relation to a process. Okay, so for example, just a minute. For example, procurement is a process. Is it a process? Procurement? Tell me, everyone. Is it a process? Process means it involves a lot of activities. So can you name some of the activities which will fall under procurement? Yes, quickly. Can you name some of the activities? So under procurement, what will come? Material verification. Yeah, so you're saying purchase order. Okay, so maybe you're saying material in relation to the material. So there is a purchase order which will be raised. Okay, so there is a PO. Then of course acquisition is there. Yeah, so once the acquisition is done, then it's testing, its physical verification will be carried out. Yeah, similarly delivery, of course, yes. Now This procurement, which involves various transactions, or you can say this process, which involves lot of activities, is technically termed as class of transactions. Okay, so there is a class. Within this, lot of transactions are going to occur. Within this, lot of transactions are going to occur. So if let's suppose you are checking a particular transaction, what do you call it as? Testing of a transaction. But if you are checking a class of transactions, what does it mean? That within that class, within that process, various transactions are required to be tested. Okay, clear on this? That within that process, within that class, various transactions are required to be tested, or that is something which is going to be tested. Okay, so now this is another term which talks about class of transactions or the transactions. Okay, now the next term. The next term talks about risk control. Okay, now this is one area over which we are going to spend significant time, but I'm just trying to bring in some perspective, okay, as around this risk control, some of these points, okay, so that you can just get the overall perspective as to what is it that we are going to look at now. Okay, and for doing this, what I'll do is I'll just pick up one example. Okay, with the help of that example, we'll just try to understand this. Now, say for example, you are working with a company. You are not an auditor. Huh? Okay, please understand. You are working with a company. So let me just name this company as T Limited. Okay, so you are working with a company. Now tell me one thing, that company will have a lot of activities on a daily basis, a lot of processes, a lot of transactions on a daily basis. Now for you, if you happen to be the part of top management or maybe the employee or whichever level you are working at, or whether let's suppose you happen to be the owner of the company, if you want to run this company, what is the first thing that you will want to establish? For you to run this company, what is the first thing that you will want to establish in this company? Something that comes to your mind? Okay, Garima says assets, Pranav says capital. Great, yeah. But I'm just not talking about the capital or the assets. Of course, these are the things that you will establish, which you will want to bring in. The first thing that you will want to establish will be a system. You can say a process. Yes or no? Because let's suppose this company has got 100 employees. And this company has, let's suppose, a turnover of 500 crore. Whether this is profit making or loss making, for this company to be run, is it possible that the company is being run wherein the systems, processes do not exist? Do you think that will work? Tell me. No. So that's why, what is the first thing that would a company set up? Systems. You can say process. Systems, processes. Okay, which is also called as SOPs. Or you can say policies or procedures. Policies or procedures in relation to various activities. Yes or no? Now, what do we mean by these policies and procedures? Or let's try to understand as to how these policies and procedures will be set up. Yeah, because That's the next thing we are required to look at. If let's suppose company decides, okay, I'll set up the policies, I'll set up the procedures. So how will these policies and procedures be set up? What is going to be the way? Can you think about it? Okay, great. Avinash is saying flow of hierarchy needs to be established. Very good. Anything else which comes to your mind? Quickly. Hardik says internal control. Okay, great. Ajay Surya says memorandum. Decentralization is what Uday says. Rules. Sure. Mohammed says planning. Okay. Now, one thing which the company will have to do to get into these policies, procedures, and a lot of these aspects is again the same point. In relation to various activities which the company plans to do, what is the first thing they will think? What is going to be the first thing which the company will think about? So let's suppose company says that I'll have one activity one, which will be in relation to procurement. My activity two or set of activities two will be in relation to sales, marketing. Yeah. Now, for each and every activity or for flow of activities or for various transactions, what is it that the company will have to think? Company will have to think what can go wrong. Yes or no? Tell me what can go wrong. Yeah, because if the company will not think as to what can go wrong in relation to various activities, various transactions, do you think company will be able to come up with any system, any process, any policy? So how will a company frame a policy? In what respect will the company frame a policy? Will that be possible? Tell me, will that be possible on the part of the company? Everyone says no. Yeah. Yeah. Omkar says not possible. Great. So that means the first thing which the company will have to think about in relation to setting up of this complete system will be what? What can go wrong? And this what can go wrong is technically termed as, can you tell me what is going to be the technical term of this what can go wrong? Something that comes to your mind quickly. Quickly, huh? What do you think will be the technical term? Yes. Aisha says risk. Elias says risk. Very good. So this is what you call risk as. So the management will do what? Management will think about various risks which may exist. So do you now understand the meaning of risk? Tell me, everyone, are you now clear on the meaning of risk? Yes or no? Yes or no? Yeah. Let me just relate to one very, very simple point. Okay. Now, what could be the meaning of a risk? Say, for example, you plan to appear for the exam. Okay. You plan to appear for the exam. Now, you believe that you will not be able to complete the complete syllabus. So that's why you are planning to skip 4 chapters. Let's suppose that's your plan. You're saying, no, it's not possible. I'll not be able to cover anything. So I'll skip 4 chapters. Now, when you skip 4 these chapters, what is it that can happen? Something can go wrong. What can go wrong? That out of those 4 chapters, maybe there are some questions which have been asked in the exam. Yeah. So that's a risk. Understood? That is what you call as a risk. Yeah. Now, can you tell me if there is any way through which you can take care of this risk? Over to you quickly. I just discussed the risk with you. Yeah. So can you tell me if there is any way through which you can take care of this risk? So what was the risk? You skipped 4 chapters. And the risk is that some questions are going to be asked in the exam as around those chapters. So can you tell me? Great. So I think this response comes from Pranav. Pranav is saying, very simple, sir. Complete the syllabus. Exactly. Exactly. So how do you manage that risk? How do you mitigate that risk? By completing those chapters also. Okay. Or you can say by setting up a control, by setting up a system, by setting up a mechanism through which you do not skip any chapter. Yes or no? Yes or no? So Sarvesh says maybe there is a time plan. Yeah. Anirudh is saying maybe we can read the summaries. So whichever plan you prepare, that's a separate thing. We are saying what is the first thing that the company in a similar manner do that against all of these risks, because there is not going to be only one risk, there are going to be various risks. Against all of these risks, what is it that the company will want to do? Company will want to set up a control, which means that how will the company take care of those risks? That is what is the meaning of control. Control means the way through which this risk can be managed. Understood? Understood the meaning of risk and control? Any questions so far? Quickly, huh? Any questions if you have so far? Quickly. Over to you quickly. Any questions? No? All right, great. So now, see, in respect of this risk and control, we discussed at the first place that the management, please remember, a company will establish this entire system. And what would this system include? This system will include identifying various risks. Now I'm using this technical term, identifying various risks which may exist in relation to various activities, various processes, various transactions, and also setting up controls in relation to all of those risks. Why? Because if the risks are identified, but no control has been established as around that risk, then what is going to be the benefit of identification of that risk? Yes or no? Yes or no? Right? Now, let's come back to the role of the auditor. Why? Because we are now concerned with the role of auditor. We are now concerned with the role of auditor. As an auditor, what is it that we are required to look at? As an auditor, what is it that we are required to look at? Can you tell me? What is the objective of audit? What is the role of the auditor? What is he required to do? Tell me. What is it that he is required to do? Anirudh saying to give assurance. Great. Rachna says to report. Great. So he is required to ensure that the financial statements are free from material misstatement. Yes or no? Financial statements are free from material mistake. And for achieving this objective, so that's the objective of the auditor. For achieving this objective, what is it that the auditor will do? Auditor will also do the identification of risks in relation to various activities, various processes of the company. And the auditor will also look at various controls. Now, please remember, auditor will not design these controls for the company. Auditor will only look at both these things. Auditor will look at both these things. Auditor to review, or you can say examine, audit. Yeah. Whose documents are these? Management. Who will identify the risk? Management. Who will design the control? Management. Okay. Now, that's first part to our discussion, that these risks, controls which are set up by the management are required to be looked at by the audit. Over and above that means over and above these risks. Now, this is what you call as risk assessment. Over and above the risks which the management has identified, auditor will also identify the risk. What does it mean? It may happen that in relation to a particular transaction, to a particular process, some risks may exist, but the management has not looked at it. So maybe the management has missed out on that. So does it mean that the auditor will also miss out? No. Auditor will do his independent risk assessment, identification of risks. Of course, he will also look at all of these risks which are assessed by the management. But over and above that, he will also evaluate that on his own. And against all of these risks, you can say part A and part B. Auditor will then look at what are the controls which exist. What are the controls which exist? Okay. Now, in relation to this particular chapter, our entire discussion will be focused around all of these aspects. You can just say that broadly, I've just given you an overview as to what is it that is going to follow. What is it that we are going to look at? What is it that we are going to cover? You can say it's more of a trailer. Okay. So now what we'll do is one by one, we'll pick up both these things and we'll get into the detailed discussion as around all of these points one by one. Okay. But before that, if you have got any questions, any doubts, please let me know. Yes, over to you. Yes, quickly, over to you. Any questions, any doubts, if you have, please let me know. Okay, so Bhavna is saying, sir, please repeat risk assessment. Of course, see, the risk assessment is something we are going to cover in greater detail. Yeah. So anyways, we are going to cover that. Yeah. Hardik is asking, sir, is this risk assessment that we are going to cover? Yes, of course. All right. So I think Pallavi is asking, sir, this risk assessment company, and see, the company has to anyways work independently in relation to their systems. Over and above that, auditor is also required to assess the risk, identify the risk. Okay. Yeah. Clear on this? Sai and Uday are asking, sir, in short, assertion one time. See, assertion, you can say, is one of the ways to verify something. If let's suppose you want to verify the valuation, that is called as assertion in relation to valuation. if you want to verify the disclosure, whether the disclosures are there or not, that is also called as assertion. If you want to verify the existence, that is also what is called as assertion. Okay, so one of the way to check something, one of the way to examine something. Understood? Anyways, so if some of these points are not yet clear, don't worry. There are a lot of things that we are going to cover as around all of these points repeatedly during the course of our discussions. Yeah. So don't worry about it. All right. So now let me just move further. So what I'll do is I'll just move on to our discussion in relation to audit risk. Okay. So let's try to discuss about this audit risk. Now, audit risk. Now, what is this audit risk? And what does it comprise of? How is this required to be taken care of? Its relation to the understanding of the risk that we have just obtained. All of those aspects we are going to discuss now. Okay, so now for a period of time, our discussion will be focused towards audit risk. Okay, so now entire discussion that we are going to have will be in relation to audit risk. So audit risk, one can say, is a composition of two types of risks. Now please remember, when we are talking about audit risks, so over here we are not talking about the risks in relation to various activities only. Now we are looking at as to what can go wrong as far as audit is concerned. Okay, so now in relation to the auditor, we are checking as to what can go wrong. Can you now understand the thought process? Yeah. So as around the audit process, as around the audit procedures, we are required to look at, we are required to assess as to what can go wrong. Now, in relation to audit risk, or you can say, when we talk about audit risk, what does it mean? So there is a risk. What is the risk? That the objective of the audit is not achieved. Yes or no? That the objective of the audit is not achieved. Should we say that's a risk? Should we say that's a risk? The answer is correct. Yeah. Or in other words, we can say that auditor is required to check that the financial statements are free from material misstatement. But even after audit, financial statements are not free from material misstatement. They carry material misstatement. Is that a risk? Tell me, is that a risk or not? Is that a risk? The answer is yes. Now, does it mean that the auditor will not do anything about it? Yes, of course, he will do anything about it. And he will do a lot of things about it. But does this risk remain? The answer is yes. To begin with, was that risk in existence? The answer is yes. So now we need to understand that what are the various types of risks which may arise, because of which the objective of the audit may not be achieved, because of which auditor may not be able to fulfill the desired objective. Okay, and for understanding that, we need to segregate this audit risk into two parts. Okay, so we'll divide this into two parts. Risk of material misstatement and detection risk. Now again, you have questions or what do you mean by this? So this is something which we are going to cover in greater detail. Okay, so now the first part that we are going to pick up is about the risk of material misstatement. So let's try to understand, what do you mean by risk of material misstatement? Risk of material misstatement means that there is a risk. What is the risk? Financial statements are materially misstated prior to audit. Please remember, prior to audit. So we are not talking about after audit. When we are making this statement that there is a risk that the financial statements are misstated. So is this statement correct or not? Tell me. Will you agree with this statement or not? That as regards the financial statements, there is always a risk that they are misstated. I'm saying prior to audit. Everyone says yes. Very good. Gurminder says yes. Great. So now, can you also tell me that the moment you say that there is a risk that the financial statements are misstated, where does this risk come from? Can you tell me? Where does this risk come from? Is it coming from the procedures of the auditor or the information or the financial information of the company? Where does it come from? Hardik says it comes from the management. Very good. So now, this risk, the moment we say risk of material misstatement, if we define that risk as a risk that the financial statements are materially misstated prior to audit, it means that we are currently talking about risk which is flowing from the company. Understood? Yeah. So this risk is what flows from the company. Now this is very, very important point. So we are currently talking about one category of risk which is flowing from the company. Understood? Yeah. Now, in relation to this risk of material misstatement, let's try to look at some examples. Now, what could be the examples? Because an immediate thought may come to your mind, sir, what could be the examples? Great. Inventory may be overstated or understated in the financial statements. When that has been prepared by the management, can we say that this risk is there? Can we say that this risk is there? Yes or no? Can we say that this risk is there? Pallavi says yes. Another example. Management has selected or applied inappropriate accounting policies while preparing the financial statements. Is that a risk because of which financial statements may get materially misstated? The answer is yes. Now, this could be intentional or unintentional. We are not looking into that. Please remember. So we are not saying that the risk of material misstatement is always intentional. No. So this could be intentional or unintentional. Understood? The problem is what? The financial statements prepared by the management are carrying material misstatement. Okay? Yeah. So that's a risk, which we call as risk of material misstatement. Now, this risk of material misstatement, please understand, this may exist at two levels. What do you mean by these two levels? Either it is occurring in the entire set of financial statements, means this is impacting the entire set of financial statements, means impact is such that the overall financial statements are misstated, which you call as its impact is at the overall financial statement level. Or other category could be which is only impacting maybe some of the disclosures or one disclosure, which is only impacting one account balance, which is only impacting one class of transaction, which is only impacting one assertion. Understood? Yes or no? Tell me, everyone. Yeah. Will this statement be correct? Yes or no? Yeah. So this may either be impacting maybe a particular line item, or this may be impacting the entire set of financial statements. Yeah. So both the ways this misstatement may arise. So that means we are required to look at both the scenarios. We are required to look at both the scenarios as far as our discussion and assessment is concerned. Now, let's get deep dive into this risk of material misstatement. So what do you mean by deep dive? For the purposes of our detailed discussion and assessment, we'll now break this risk of material misstatement further into two types. One is called as inherent risk, and second will be called as control risk. Or we can say that risk of material misstatement comprises of two types of risks. So if one has to understand risk of material misstatement, one needs to get into its components. What are its components? What are its types? One, inherent risk. Second, control risk. So now comes the question. So you may be thinking that, sir, this way we'll just keep uncovering each and every layer. Yes, of course. So that is what is going to be our objective. So now, please remember, we started with audit risk. Everyone, huh? So I'm just trying to remove your confusion because some of you may have got confused. Yeah. So now, initially, we started with audit risk. And in relation to audit risk, we discussed that first of all, we'll pick up those risks which flow from the management. Which flow from the management. Means there is one category which will flow from the management. Means over which auditor is not doing anything. They are coming from the management side. Okay, management is responsible for those risks. So what did we call those types of risks as? Risks of material misstatement. Now, in relation to this risks of material misstatement, if one has to understand this in greater detail, this further needs to be broken into two parts: inherent risk and control risk. Okay, everyone clear so far? Any questions, any doubts so far? Quickly, huh? Quickly, I think somebody was asking to explain again. Tambeshwari, you're clear on this now? Quickly, please confirm. Uday is clear. Great. What about others? Yeah, Shweta is also clear. Great. I can see this query coming from Srini. Srini is asking, sir, why detection risk is not a part of risk of material misstatement? Great. So we'll talk about it. So once we'll get on to our discussion of detection risk, you will understand that. For the time being, please park it. Okay. Please ignore that for the time being. Okay. Yeah. Any other question? Any doubt? So I think this query comes from Sai. Yes, Sai. Please go ahead. Yes, please go ahead. Huh? What is your question? I think you want to ask something, Sai. Yes, Sai, please go ahead. Okay, so Anirudh has a question. Anirudh is saying, sir, doubt is with respect to two classifications. One is overall financial statement level. Second is account level. Do both these contain inherent risk and control risk? Yes. Of course, yes. Now the point is, what is inherent risk? What is control risk? Please understand, we have not yet discussed. Okay, so I'll come to both of them in greater detail. We have not yet touched upon that. So please don't worry. What is inherent risk? What is control risk? I'll come to that. Okay. Yeah. So far, if there is anything as around the flow that we have discussed, any doubts, if you have, You may let me know quickly. Huh? Quickly, any other questions? Okay, so I can see a couple of queries coming in as around the assertion level. Okay, Ratimalini and Sarvesh, they are asking, sir, can you please explain assertion level? Sure. So let me just do one thing. Let me just go back to that point. Okay, and then we'll come back to this. Okay, so let me just go back to the assertion discussion. Now, what do you mean by assertion? See, assertion, you can say, are the ways to check a particular account. For example, say if you talk about salaries, let's suppose salaries are required to be examined. Now, in relation to salary, there are two concerns which an auditor can have, or you can say two types of concerns which an auditor may have. What is the first concern? That the salaries are paid to the employees but who do not exist. Salaries are paid to the employees but the employees actually do not exist. Okay, so those are fake employees. These are bogus transactions, ghost employees. This is what Adri 6. Yeah. Now, for taking care of this concern, what is it that the auditor will do? Auditor may physically examine or physically verify employees. Not all, some of them. Through this, his concern that the salaries are paid to bogus employees will go away. Yeah. So you can say it's all about taking care of one type of risk. Now, if the auditor wants to check, that the salaries have been paid as per the appointment letter, means whether the amount paid to the employees is correct or not, means the accuracy. Can this accuracy be tested through this procedure? Quickly tell me, can this accuracy be tested through this procedure? The answer is no. So that's why for checking the accuracy, or you can say for looking at this other perspective, this other way, which is also important for checking of salaries, what is it that the auditor will check? Auditor will check the appointment letter. Auditor will verify appointment letter. Yes or no? Yeah. So these different ways through which different perspectives are checked. What do you call it as? Assertions. Now clear on this? Yeah. So these are what you call as assertions. So everyone now clear on this assertion? Are we now clear on the meaning of assertion? Okay, great. So Rati Malini is saying yes. Very good. So I'm just hoping, Sai, I think you also had this similar doubt. Hope your doubts are clear now. Okay, great. Sarvesh is also clear on this. Very good. All right. So now I think if your questions, doubts are clear. So let's do one thing. We can take a quick break, huh? Maybe for 5 minutes. Yeah. So let's take a quick break of 5 minutes. So after the break, we'll continue with our discussion. Okay. So let's break for 5 minutes. Huh? Sure. So now we'll be discussing the risks. Now, as regards the risk of material misstatement, for us to get into that greater details, we are now segregating this into two parts. So its first part, you can say the first type of risk of material misstatement is what? Inherent risk. Now this appears too technical for us. Yes or no? Yeah. So let's try to understand the meaning of inherent risk. You can say it's the susceptibility of an assertion in relation to any transaction, any account balance, any disclosure, okay, to a misstatement. There is always a risk that before considering any existence of internal control, a particular transaction, account balance is misstated. Now, let's try to understand this with the help of some examples. Say, if there is any activity, okay, or let me just first of all take up your example. Let's suppose if you are preparing for any subject, okay, for any subject, which appears to be too technical, which is very difficult. So in such a case, your chances of making a mistake, whether you prepare for that or not, will be higher or not? Tell me, will be higher or not? If let's suppose there is something very, very difficult, if let's suppose the examination paper is extremely difficult, very difficult, even though you prepared, but see, it was very difficult. Generally, what do you find? That the exam is very, very difficult. So in such a case, the chances of any student making a mistake or qualifying, what will you say? Will be lower or not? There will be a chance of making a mistake or not? Yes or no? Quickly, tell me. Everyone, quickly. Everyone, quickly. Okay, great. So now, please remember that this type of risk is what you call as inherent risk. Means something which is implicit. So we discussed that we are preparing for the exam, no doubt. And we will be very well prepared for the exam, no doubt. But whether we prepare or not, there is an inherent risk. What is the risk? That it's going to be difficult. So that's why chances of making a mistake are going to be higher as compared to any other exam, which is going to be easier. Understood? Understood? Yeah. Now, similar to this, let's take the example of a company. Let's take the example of a company. In case of a company, let's suppose during the year, there was a very complex matter. So can you name any accounting standard which you may have read and which you find to be very difficult? Anyone? Anyone? Let's suppose any accounting standard which you may have covered, but you believe that is too difficult. Tell me quickly. Quickly. Of course, everyone will have a different answer. I agree. I'm not expecting any similar answer from everyone, but any topic which you believe, okay, which you think is too technical, too difficult. So every time you read, even if you read, you find it difficult. So I can see a lot of answers around AS20 and AS15. In fact, Pallavi saying GST. Okay, great, sure. Now tell me one thing. if let's suppose you happen to be the management of the company, let's suppose you are the part of management, you are the part of accounts team, you are the part of finance team, and during the year there is a very complex transaction, there is a very complex accounting matter. During the year there is a complex accounting matter. Now in this case, even though you will analyze that matter, you will try to look at the right accounting policy for this. You will try to apply the appropriate accounting guidance in relation to this matter. Still, the chances of not selecting the right set of accounting principle, does it remain or not? Tell me. Will that remain or not? Tell me. Yeah? Yes or no? As compared to any other matter, any other transaction. Yeah? Now, this type of risk is what you call as inherent risk. So even if the company has got the systems, what does it mean? That the company has established appropriate controls to take care of these risks, but still this risk will increase, or you can say this risk will be higher, or this risk will always exist. Understood? Understood the meaning of inherent risk? Yeah? Understood the meaning of inherent risk? Yeah? Now, depending on the type of transactions which are there in a company, depending on the complexity of the matter which is there in a company, inherent risk will arise, or you can say inherent risk will exist. But in relation to any company, inherent risk will always exist. Why? Because it may also depend on industry to industry. For example, if let's suppose we talk about real estate, okay, in case of real estate, lot of estimates are required to be prepared. Estimates in relation to costing, which means the project cost. Okay, yeah. Now, because it's an estimate and over which 100% accuracy cannot arise, can the estimate be 100% accurate? Tell me. Anyone, can you tell me, can the estimate be 100% accurate? Tell me. Everyone is saying no. Everyone says no. Yeah. So now, in relation to an estimate, what do we say? That there is always an inherent risk. There is always an inherent risk that it may contain some error. Yeah. So can you now understand the meaning of inherent risk? That with certain line items, with certain processes, with certain companies, with certain transactions, inherent risk will get attached. Why? Because that may be complex, that may bring in that sort of risk. We are not saying that if the risk remains, so the material misstatement will also remain. No. We are saying chances of material misstatement will therefore increase. Understood? Now, you may have a question that, sir, if the chances of material misstatement will increase, chances of material misstatement exist, so will the auditor not take care of that? Of course, yes. See, as around all of these things, there are a lot of things that the auditor will do. But at the first place, auditor needs to understand this, that in relation to something which he is going to check, or anything which is going to check, what are the inherent risks? Because only when he'll understand the inherent risks, he will be able to take care of that. Yes or no? Yes or no? Yeah, clear? Everyone clear on this? On the meaning of inherent risk? Please confirm quickly, because at times I have seen this becomes too technical for you. Yeah, so many times, yeah, maybe some of you may have dealt with this and they may have thought that, yes, of course, this is very, very difficult. Huh? So I'm just hoping this is clear. Yes, Hardik has a question. Yes, Hardik, please go ahead. Yes, Hardik, please go ahead. What is your question? You have raised hand. Hardik? No? All right. So maybe you can just write down your question. No worries. Okay. So Tambeshwari is asking, sir, can you please explain in short? Yeah, sure. I think as around the inherent risk, we are talking about such type of risk which may continue to remain even if the control process of the organization, the controls, remember the controls we just talked about, even if those controls are there, even if those controls are established, so that risk may remain. For example, there is a complex accounting matter, there's a complex transaction, okay, over which, let's suppose, some thought process is required, some judgment is required, and the moment we say it's judgmental, it's subjective, so the chances of error will increase. So that is what you call as inherent risk. Clear on this? Clear on this? Yeah? Yeah? Okay, so Hardik is saying, sir, can you please explain the meaning of susceptibility? Susceptibility means it will invite that. So it will invite that particular risk. Okay, so chances of this getting attached to that increases. Yeah. Okay, Uday is saying, like we can say quality issues in manufacturing company. Yes, of course. So if you talk about quality in relation to development of a product, so of course, if it's a manufacturing company, so there's always a risk. What is the risk? That its quality is not appropriate. Yeah, clear? All right. So now Anirudh has a question. Anirudh is asking, but sir, auditor will be comfortable if the risk profile is low. See, whether the auditor will be comfortable or not comfortable, number one, and whether he's comfortable or not comfortable, what all procedures he'll do, that is going to be our next step. Okay, so we are not yet discussing that. Yeah, so that's not the idea right now as to what is it that the auditor will do. As of now, we are saying that auditor needs to assess the risks. And in relation to risks, we are trying to understand the types. Okay, are you now clear on this? Yeah. So you may have a question. I can understand that what is it that auditor is going to do? Please ignore that, because that is going to be our next stage. Over that, we'll discuss sometime later. As of now, you can just consider that once this assessment is done, only then the auditor will be able to design his audit procedures. Okay, then I can see a lot of examples are being shared. Yeah, very good. Sure. All right, so now let's talk about second type of risk of material misstatement. Can you name that quickly, please? Second type of risk of material misstatement. Over to you quickly. Let me just see who remembers that. Second type. Very good. So there we are. So Dakshi is saying control risk. Very good. So now what we'll do is we'll discuss about the meaning of control risk. Now I think this is quite easy for anyone to understand. I think Tushar and Mohammed also answered the same thing. Great. Control risk is the risk that a misstatement may arise. Okay, misstatement may arise in relation to a class of transaction, account balance disclosure, or any other thing. Okay, and that will not be prevented, detected, or corrected on a timely basis by the entity's internal control. So I think this can be best understood with the help of some examples. Because without examples, this may become too difficult. So let's try to look at some examples. A company has devised a control. What is the control? Please remember, every time there is a control, who will design that? Quickly, please. Every time there is a control, who will design that? Will that be the auditor or the company? Quickly. Will that be the auditor or the company? Yes. Pooja says it will be management. Great. Yeah. So I think same is the answer from Pranav also. Very good. So now a company has devised a control that cash and checkbooks should be kept in a locked safe, number one, and their access is granted to authorized personnel only. Okay, now initially there was a risk. Okay, management thought. So let's suppose there was a team of management. Okay, so they were thinking that in relation to cash book, checkbook, what is the problem? What can go wrong? So they thought that maybe somebody can just make use of that. Yeah. So anybody can just make use of that. So what did they do? They set up a control. They designed a control. What was the control? That let's keep these documents in a safe and that will be locked. Further, the key to that locker will only be available to the cashier. Key to that locker will only be available to the cashier. And let's suppose there are only 2 cashiers in the company. So is that a control or not? Everyone tell me, is that a control or not? Yeah. Is that a control? Yes or no? Now, even though this control has been set up, still there is a risk. What is the risk? That if this control has been designed, it's been set up, what if this control is not followed by the people? What if the cashier is sharing this key with various other persons? What if the duplicate keys are made available to other employees as well as other than the cashier? So that risk still remains or not? Tell me. Tell me. Does that risk remain? Yes. So what do you call this risk as? This risk is called as control risk. What do you mean by control risk? That the control which has been set up, which has been designed, may not be operating effectively. Company has rolled out a policy document. Company has prepared a manual. Company has also instructed the cashier, but still it's not being followed. It's not being implemented. Practically, nobody is taking care of that risk. Can you now understand the meaning of control risk? Yeah. Okay. So let's look at some more examples. Just a minute. Now, next example. An entity has devised a control. Okay, so we are looking at this example. An entity has devised a control that fire extinguishers and smoke detectors are in place and in working condition at all times to reduce the risk of damage to inventories if at all there is a fire. If at all there is a fire. Okay, now, so management thought, okay, maybe there was a storekeeper. He thought, so the company was discussing that they need to design their risks document, they need to design their control document. So they thought that to the inventory, so there's a huge inventory. This inventory may get lost, this may get damaged. So tomorrow, if there is a fire, so how will this be protected? So that's why, what did the management do? Management created a system. They brought out a policy. What was the policy? That every time in the store, there will be a fire extinguisher, there will be smoke detectors, and they should always be in a working condition. Yeah. So as far as the management is concerned, a control has been put in place. Yes or no? As far as the management is concerned, a control has been put in place. Yes or no? Quickly tell me, do you agree with this? A control has been put in place. Yeah. But what if these fire extinguishers which have been set up, what if they have got expired or they are not being refilled? What if smoke detectors are not in the working condition? So initially they were in the working condition. So will this control continue to work? Tell me, will this control continue to work? No. So that's why, what are we trying to understand here? That even though the controls are there in the organization, and the objective of the control was what? To mitigate the risk, to minimize the risk. Still, if those controls are not implemented properly, they are not operating effectively. Operating effectively means document has been created, but practically nobody is using that, nobody is applying that, nobody is following that. Then that control is of no use. And the risk which was being managed or which was planned to be managed through that control will arise, again. Okay, everyone clear on this? Everyone clear on this? Yeah, everyone clear on this? Now tell me one thing, that so far we have discussed two types of risks. Okay, let me just take you back to this two types of risks. Okay, we have discussed inherent risk and control risk. So far, we have discussed these two. Okay, now tell me one thing, that as around these two types of risks that we have discussed, do you think that these flow from the management side always, or auditor will have some contribution to that? Tell me. Tell me. Do you think that these will flow from the management always? Yes or no? Yeah. So they will always flow from the management. Yeah. Yeah. So that's why what I have done is, this first category that we have discussed, I have marked it as the one which is flowing from the company. Means something which arises from the company. Can the auditor control it? Yes, of course. It's his duty to control. But before controlling that, auditor needs to understand that these two types of risks may exist. If he will not understand, he will not be able to take care of that. Yes or no? Everyone clear on this? Any questions around this? Yes, quickly. Any questions if you have? Okay, great. So Sarvesh has a question. He's asking, sir, as per the example, if the company decides to check the working of fire extinguisher every 6 months, so this can be controlled? Yes, of course. See, we are not saying that every time the control will not be implemented or it will not be operating effectively. We are saying despite that control being set up, a risk may remain. So just because there is a control, auditor should not think that if the control is there, so that's why that risk is completely gone. Even if control is there, risk may continue to remain. So that's why auditor cannot close his eyes by just looking at the control. He needs to go beyond that. So that's the thought process. Then Shubrata has a query. Okay, so it says, what's the difference between both? In both the risks, in both these, risks remain even after the controls. Yes, see, the difference is very simple. What we have tried to assess is that if, let's suppose, you happen to be the auditor of a company, Let's suppose your role is what? To go and check inventory. Yeah. And let's suppose, sorry, your role is what? Your role is to check that as around the inventory, everything is in place. Okay. Systems are strong. Let's suppose that's your role. Forget the financial statements. Now, as an auditor, if you go and look at the control, let's suppose there's a control manual. Okay. On a piece of paper, company has a policy that every time in relation to inventory, there should be a fire extinguisher, smoke detector should be there, it should be in working condition. Okay, you read that document. Why? Because design is there. That is what you call as design of the control. Even though that is not operating effectively. So can you just close your eyes and you can say, no, if the control is there, so that's why I'm good with this. I need not do anything beyond that. Tell me quickly. No. So that's what you are required to do. So that's the difference. Can you now understand this, Shubrata? Yeah? Shubhatra? Yeah? Clear on this? Okay, great. So then, Manvi is asking, sir, do we have any similarity in inherent and control risk? No. See, what is a control risk? Control risk means that the control is not operating effectively. But when it comes to the inherent risk, in case of inherent risk, we are talking about those risks which may be there, even if controls are operating effectively. See, the control risk will not exist if the controls are operating effectively. But inherent risk may continue to remain even if controls are operating effectively. What are those risks? As we discussed, let's suppose to take care of the accounting requirement. There's a risk. What is the risk? That the accountant may be incompetent. What is the risk? Accountant may be incompetent. So that's why whenever any complex matter may come, he may do wrong account. Let me just take this example. I think some of your doubts should go away with this. Let's suppose there is a risk. What is the risk? That accountant may not be competent. Okay, so competency is an issue. Yeah. Competency means he is not able to do the right accounting. So can you tell me what will be the control which the company will establish? What is the control which the company can establish? Quickly, please. As against this risk, what is the control which the company can establish? Hardik is saying a supervisor. Pranav is saying hire effective accountants. Yes. So there are two types which I can think of. One, hire competent personnel. Okay, for example, CA. For example, CA. Yeah. Or maybe provide trainings regularly. Yes or no? So you need to keep upgrading them. You need to keep updating them. Correct? Yeah. So let's suppose to take care of this risk, management has appointed a competent person. Say an experienced chartered accountant has been appointed. Now tell me one thing. If an experienced chartered accountant has been appointed and there comes a complex accounting matter, so can we say that the risk of wrong accounting will go away? Tell me. If let's suppose a senior chartered accountant is working with the company, so can we say that the risk of wrong accounting will always go away? So the control is in place. Please remember, control is in place. This has also been implemented. still this risk remains. What do you call it as? Inherent risk. What do you call it as? Inherent risk. Understood? Yeah. So some of you had doubts around inherent risk, difference between inherent and control risk. I'm just hoping that you are now clear on this. Yeah, so I think Mohammed seems to be clear on this. What about others? Everyone clear on this now? Quickly, yeah, please. Everyone clear? Yeah, great. So it seems that you are now clear on this. Very good. So let me just move further now. Okay, because if you are clear, then I think it's good to go. Yeah. All right. So let's move further now. Now, what we will do is we'll now look at this second category of risk. The first category was the one which flows from the company. The second category is the one which doesn't flow from the company. No. This is something which arises from audit process. Or you can say something which flows from the auditor. Something which the auditor carries. Detection risk. Yeah. So please remember that we are discussing those risks because of which financial statements may contain material misstatement. So the first category was the type of risks which flows from the management. So management prepared the financial statement, they contained material misstatement. So there is a risk that auditor may not be able to catch that. That is something which is flowing from the management. Now we are looking at second type of risk, detection risk, which doesn't flow from the management, which arises from the audit process, or you can say which is somewhere in relation to the audit process. So let's try to understand the meaning of detection risk. Now, as the terminology says, it's the risk that the procedures performed by the auditor. So what is the objective of the auditor? To reduce the risk. To reduce the risk means to achieve the objective. But there is a risk. What is the risk? That the procedures performed by the auditor will not detect material misstatement. Yeah. So we are looking at a risk that even though audit has been performed, in fact, this is something which you have asked me in the past. Sir, what if audit has been performed and still there is a material misstatement? So this risk exists. This risk exists that auditor has performed the audit procedures, but even after performance of the audit procedures, material misstatement continue to remain in the financial statements. Now, this risk may arise because of two reasons. You can say there are two reasons which may contribute to this risk. What is the first reason? Sampling risk. I think we have talked about sampling risk. But still, let's repeat things. It's the risk that the auditor's conclusion based on a sample may be different if entire population were tested. Remember we discussed about this. Quickly tell me. Remember we discussed about this earlier, that because the auditor will be checking some samples, he'll not be checking everything. So that's why it may happen that some of the samples he is not checking. Those samples contain errors and those errors are material. Science saying, yes, this was the limitation of audit also. Exactly. That's the point. This was also the limitation of audit. And that is what we are discussing here, that this is a risk which exists in the audit process. Another type, non-sampling risk. Let's try to understand that. Now, what do you mean by this risk? Risk that the auditor reaches an erroneous conclusion for any reason. So there was one problem. What was the first problem? First problem was that out of a population of 10,000 items, auditor tested 100 items and remaining items contained misstatement. So that was a limitation. But let's suppose if we are talking about a risk which is not arising. Why? Because the samples are not tested appropriately, but because the auditor applied wrong judgment. Maybe the skill set which was required to audit was not there with the auditor. Yeah, maybe there was a competence issue. There was a competence issue. In such a case, will you continue to say that because there was a risk in the sample, that's why this risk is there? No. No. So let's try to take up an example for this. Auditor of a company has audited revenue by taking a sample. Yeah. However, there's a risk that the sample is not representative of the overall revenue. So what do you call this type of risk as? Quickly. What do you call this type of risk as? Ch3 is saying sampling risk. Yes, of course. Manvi says sampling risk. Very good. VR says sampling risk. I think same is the response of Said also. Yes. Now, let's look at one more example. Sizable work in progress inventories are expected in the financial statements. Okay, so as far as inventory is concerned, WIP, work in progress, is going to be a significant portion of inventory. Okay, but auditor ignored this WIP. He did not devote appropriate time to the inventory count of WIP. Inventory count means physical verification. So when the physical verification was performed, auditor ignored WIP. He didn't pay much attention to this WIP. Why? He thought that this area is not so important. And later on, in WIP, material misstatement was observed, or you may say that it existed in the WIP. Then what will you call this error as? Tell me, what will you call this risk as? What type of risk is this? Vaishnavi says non-sampling risk. What about others? Can you tell me what type of risk is this? What type of risk is this? Non-sampling risk. Non-sampling risk. Okay. Yeah. So now, as far as the risk assessment is concerned, and now we are talking about risk assessment in relation to material misstatement in the financial statements. What are the various risks which can lead to this material misstatement in the financial statements? We can say this may arise due to inherent risk, number one. This may arise due to control risk, number two. And this may also arise due to detection risk. Could be because of sampling risk or non-sampling risk. Yes or no? Tell me, do you agree with this? That a material misstatement in the financial statement could remain because of either of these types or all of these types. Quickly, tell me, yes or no? Yeah. So that's why a combined assessment. That's why a combined assessment of all these types of risks is required to be done by the auditor. Are you clear on this? Yeah. So that's why a combined assessment. So what do you mean by combined assessment? Means auditor is required to look at this type of risk, as well as this type of risk. Auditor cannot say that he can ignore inherent risk. Auditor cannot say he'll ignore control risk. At the same time, auditor cannot say he'll ignore detection risk. All of these risks are required to be looked at by the auditor. Okay. Everyone clear on this? Quickly. Everyone clear? Great. So what I'm going to do is I'll pick up some examples now. Okay. In fact, we'll just pick up some examples. With the help of those examples, we'll try to get into this concept with more details. So let's try to look at some examples. And then I'll come to your doubts once again. Okay. All right, so let's look at this example. XYZ is engaged in the business and running several stores dealing in variety of items, such as ready-made garments for all seasons, shoes, gift items, watches, etc. There are security tags on each and every item. Moreover, inventory records are physically verified on a monthly basis. You are required to discuss types of inherent, control, and detection risks as perceived by the auditor. Over to you. Now, in this situation, what is it that you are required to comment on? What could be an inherent risk? What could be the control risk? What could be the detection risk? Yes, over to you. Yes, quickly, yeah. Quickly. Think about those risks in relation to this situation and let me know. Tambeshri is asking how to calculate risk in quantity. We'll come to that slightly later. As of now, please don't get into that. Okay. Okay. Pooja is saying, so can you please also name, Pooja, what type of risk is being discussed over here? So I think Ajay Surya is saying, maybe regular check is not conducted. So that's a control risk. Yeah. So I think a lot of persons have been answering about the risk, but the type you are not putting down. So I'm not able to understand what type you are speaking about. Okay. Rachna is saying verification on a monthly basis is the control risk. No, that's correct. Verification on a monthly basis is the control risk. But on this verification, or you can say for this risk of verification on a monthly basis is the control. So what is going to be the control risk around this? So let me do one thing. Let me just discuss this with you first. Okay. So let's look at this first. If you talk about inherent risk in relation to this particular situation. Now, what could be the inherent risk? Because the items may have been misappropriated by employees. Yeah. Therefore, there is a risk to the auditor. What is the risk to the auditor? That the inventory records would be inaccurate. Yeah. So in relation to this business, because the business is dealing with variety of items. Yeah. So one, in quantity, they are numerous. Second, there is a variety of items. So that's why there will always be an inherent risk. What is the inherent risk? That the items may have been misappropriated, means they have been stolen, and because of which the value of inventory may be incorrect. The value of inventory may be incorrect. Yes or no? Yes or no? Yeah. Okay. Now, what is the control risk? I think control risk is quite easy for you to look at. There is a security tag on each item displayed. Moreover, inventory records are physically verified. So there are two controls. But what if these controls are not operating effectively? For example, employees have come together. So there is a collusion among employees. Means they have come together. Okay. And they want to misappropriate those items. Means they, if let's suppose maybe there was a group of persons working in the organization who were required to take care of this control. If they come together and they want to steal the items, so will that control work in an effective manner? The answer is no. The answer is no. Understood? Third, detection risk. Now, what is the detection risk? Auditor checks the efficiency and effectiveness of various control systems in place. He will do that by making observation, inspection, inquiry, a lot of procedures he'll perform. He'll also employ sampling technique. However, despite all of these procedures, some of the items which have been stolen, if the auditor is not able to catch hold of that, so the value of inventory is incorrect or not? Value of inventory is incorrect or not? Tell me, yes or no? In that case, what will you call it as? Yes? Yes or no? Yeah? So that is what you call as detection risk. Yeah? Means even though the procedures have been applied, still auditor is not able to get on to the right conclusion. Yeah? So let's look at one more example. Okay. A partnership firm of chartered accountants, Ch3 and Associates, was appointed to audit the books of accounts of Wind and Ice Limited. So that's the company for the financial year 2021. There was a risk that Ch3 and Associates would give inappropriate audit opinion. Please remember, inappropriate audit opinion if the financial statements of the company are materially misstated. Okay. You are required to state the risks mentioned in the question. Now, the risk mentioned in the question, what do you call it as? That is what you call as audit risk. That is what you call as audit risk. Because the risk that the auditor will give an inappropriate audit opinion. Yeah. So what do you call that risk as? Audit risk. So can you now look at this question? So in this question, you were simply required to comment that what would you call this type of risk as? As simple as that. Only one term is what you are required to use. And that's the solution to this. Can you now understand? You will be awarded marks. You will get full marks. Why? Because if you are able to identify just this term. Don't you find this too simple? Tell me. Tell me. Yeah. Yeah. Is this not very simple? Yeah. So if you understand the concept, you can just simply understand how easy it will become for you to score marks. Okay. Yeah. So Aditi has a question. Yes, Aditi, please go ahead with your question. So there are a few more questions we are going to discuss. Yes, quickly. Aditi, please go ahead with your question. No? All right. So I'll come to your questions later on. Let me just discuss some more questions. Then I'll come to your questions. Okay. Fear and Tear Private Limited is a startup engaged in providing holistic solutions to problem of paddy stubble burning, mainly catering to the needs of farmers of northwestern India. Due to importance given by the governments to this issue, companies have entered in the market in the past few years. Many of these companies have not been successful and have gone bust. As an auditor of the company, can you spot the component of risk of material misstatement involved in above? Over to you. I think this is very, very easy for you to answer. Quickly, huh? Quickly. Yes. What would you call this risk as? Okay, Hardik, Anuj, they are saying inherent risk. No, no, no. So I think if you are just answering this to be audit risk, that will be inappropriate. Huh? Just try to think about it. Pooja says control risk. I can see a lot of answers as inherent risk. Now, please understand. Huh? It's been stated that many companies engaged in providing holistic solution to the problem. They have been not successful. So this is a problem which exists in the industry. This is something which is inherent, which is implicit. Was there anything done to take care of this? Yes. A control system has also put in place. Control system has also not been put, has also been put in place. Yeah. Still, will that problem continue to remain whether that control is operating effectively or not? Yes, the risk will continue to remain. So that's why what would you call this type of risk as? Inherent risk. Yeah. So that's why what would you call this type of risk as? Inherent risk. Very good. So Mohammed answered this. I think a lot of you answered this. Okay, great. So let's look at one more example. A company has devised a control that its inventory of perishable goods is stored in appropriate conditions in a controlled environment to prevent it from to prevent any damages to inventory. Responsibility is fixed on two persons to monitor the environment using sensors and to report on deviations. Please remember, our responsibility has been fixed to monitor the environment, also to report on deviations. You are required to identify the components of risk of material misstatement. Now, let me tell you one thing. The moment the question is asking you component of risk of material misstatement. Yeah. So my first question to you, if the question is asking component of risk of material misstatement, so can your answer be detection risk? Can your answer be detection risk? I think everyone says no. So that means automatically, what does it mean? What does it mean? It can only be two. Either it can be inherent risk, yeah, or it can be control risk. Means in the question, in fact, in the question, in a way, such a simplified approach has been used so that your solution, your answer becomes very, very simple. Can you not see that? Yeah, because the question is not asking you what type of risk is this. Because if the question will ask you what type of risk is this, then the detection may also come into picture. And under detection, you may think that it can be sampling or non-sampling. Okay, so you may have to choose amongst four. But as of now, this goes away. Yeah, so very simply out of these two, you need to choose one. Yes, over to you. What do you think will be the answer? Yes, quickly. Now, tell me, what will you say? Which type of risk is this? Hardik, Hasi, okay, great. Anjali, Tambeshwari, they are saying it's a control risk. Very good. I can see some of you calling this to be a inherent risk, but let's try to look at the solution. Now, in this case, company has devised a control. Okay, we understand what's the control. There is a possibility that the persons who are given the responsibility do not perform their work. They do not report deviations. So what is the risk? That the control may not be operating effectively. So that's why this has to be control risk. Can you call this as an inherent risk? No, no, because it's something which is in the normal course of business. There's nothing which is too complex. Understood? Yeah. Then I think we can discuss this last question and I'll come to your query now after this. Okay. All right. So Ch3 Foods Private Limited is engaged in the manufacturing of garlic bread. The auditors of the company have planned audit procedures in respect of recognition of revenue of the company. Despite that, there is a possibility that the misstatement in revenue recognition is not identified by planned audit procedures. Which risk is this? What type of risk is currently being discussed? So I think everyone is saying detection risk. Okay. Can you again be very, very specific amongst the detection risk also? Should you call this as sampling risk or non-sampling risk? Let me just go one step further. So if you say it's a detection risk, which type of risk will you consider this as? Tell me, which type of risk will that be? Over to you quickly. I can see a lot of responses. Pooja says sampling. Uday says non-sampling. So I can see mixed responses. Huh? Yeah. All right. So now let's look at the solution. Huh? So there is a possibility that planned procedures may not achieve the desired objective. So no doubt it's a detection risk. There is no doubt about it. Okay. And I think over this point, everyone was very clear. Amit also answered it's a detection risk. But there comes the question that if it's a detection risk, if let's suppose I have to ask you that is it a sampling risk or a non-sampling risk? So let's try to understand this. Okay, even though you are not required to answer. So please don't worry. That sir, in the exam, do we need to write that? No. This is for your conceptual understanding. Now, in the question, has there been any discussion around the samples? No. It simply says that there is a possibility that misstatement in revenue recognition may remain even after application of planned audit procedures. So what does it mean? It simply means non-sampling risk. It simply means non-sampling risk. Okay. Clear on this? Everyone clear on this? Yeah. All right. So I think with this, what we can do is maybe we can just stop here as far as our discussion is concerned in relation to the topic. All right. But I'm sure you'll have a lot of questions, doubts. So I'll just come to your questions and doubts. But some of you who may want to move, they can just feel free. Okay. So thanks everyone for your time once again. And once again for the wonderful participation. But any questions, any doubts that remain, we can just keep discussing. And if you want to just stay around, we can just keep discussing. Okay. All right. So now this question comes from Manvi. Manvi is saying, sir, can you please explain non-sampling risk? Sure. See, Manvi, can you tell me the meaning of sampling risk? Before I get on to this non-sampling risk, can you tell me the meaning of non-sampling risk? Over to you quickly. Manvi, quickly, I'm just waiting for a response. Meaning of non-sampling risk. What do you understand by non-sampling risk, man? I'm waiting for your response. If you want to speak, you can speak. Yeah, quickly. So I think you are just writing this. Yeah, no worries. You can just write that. Quickly. Okay, so now Manvi says that sampling risk means auditor reaches an erroneous conclusion. No. Sampling risk means that out of the samples tested, if there is an error, auditor will identify. But out of the samples which are not tested, if some errors remain, will the auditor be able to identify those errors? Tell me, Manvi. No. No. Correct. So that is what you call as sampling risk. Means the limitation which is there because of the samples which are getting tested. But if let's suppose we are talking about depreciation checking. Say the auditor has asked for depreciation calculation. Now, as far as depreciation calculation is concerned, there is no sample. It's an Excel file. It's an Excel file. Auditor is required to look at the formulas, look at the calculations, look at whether the useful life has been taken appropriately or not. But let's suppose there is an incompetent person. He doesn't know how to use Excel. So there was a formula error in the Excel sheet. He didn't look at it. He ignored that. Or maybe he didn't understand. So will you call that as a sampling risk? Tell me, Manvi, will you call that as a sampling risk? No. So that is what you call as non-sampling risk. Okay. Means even though auditor has performed his work, applied his audit procedures, but he failed. Why? That will generally arise because of the competence. Okay. Or because of the judgment, or because of his experience. Understood? Then I think Hardik and Sai have a question. Yes, Hardik, please go ahead with your question.
Sir,
Yes.
good evening, sir.
Sure, good evening.
Sir, can you please explain the meaning of erroneous conclusions?
Erroneous conclusion means conclusions which are inaccurate, which are wrong. Okay.
And sir, I have one more doubt. In
Yes.
ILU 2.
Sorry?
In ILU 2, illustration 2.
Illustration 2. So,
Yes, sir.
so which page is this? I'll have to refer the page. So you can just.
Sir, you have there on the question in the PPT. There it is in question
Okay, so
2.
in question 2. So let me just go to question number 2. Just a minute. Yes. Tell me. Tell me.
Sir,
Yes.
in this, state the risk mentioned in the question. If sir,
Right.
we with audit risk, if we will write that there is like in this question there was non-sampling detection risk and inherent risk was there. So sir, if we will mention, is it wrong or?
See, it's not wrong, of course, because if you are talking it up, okay, if you are elaborating that, then there's no harm. But I would always advise you not to do that. See, in the exam, if you will answer something which is required, then let's suppose
Yes,
it's
sir.
a 3 marks question. And if you answer audit risk, you will get full 3 marks.
Yes, sir.
If let's suppose along with audit risk, you'll say in the audit risk, there is detection risk, and let's suppose inherent, whatever it is. Okay.
Yes.
So will you get more marks?
No.
No. But what if detection risk is not there? What if you answer inherent and it is control? Your marks will be deducted. Okay, so that's why you should be very, very concise. Be
precise about the answer.
Be precise. So whatever is asked for, try to answer that. If you know beyond that, don't answer that. Yeah, because unnecessarily, if you want to demonstrate your knowledge, examiner may or may get impressed, but that will not give you any advantage. But of course, an element of disadvantage always remains. Yeah, so you should always try not to do that if that is not required by the question. Okay, because what is our objective? Our objective is to get full marks.
Yes,
yeah,
sir.
maybe demonstration of knowledge you can do at the client place. So tomorrow when you will become the auditor, you can just apply your knowledge. You can showcase this and everybody will get to know. Yeah.
Okay, sir. Thank
All
you,
right.
sir.
So sure. Any more questions? No. All right. So I think Sai has a question. Yes, Sai, please go ahead.
Sir, as per regarding to audit risk, let me put an example, sir. What was my doubt? RL conceptually, as I'm right, just assure me, sir. Let me assume A is a person who is having a business. He thought that the business have some risk. He was not the right person to manage it, and he appointed a board to take care of that activities.
Sorry, I'm losing out.
Management.
So you are saying A has a business. He is in the process of running a business. Sorry, I'm losing you. Your voice is breaking.
Presented him the financials,
Sai,
but
I'm
he don't
losing
have
you.
a knowledge to understand that.
Sai, can you hear me?
He
Sai, can you hear me?
Sir, his voice is breaking.
Yes, exactly. Yeah. So maybe Ashok, you can just put him on mute and pass
Okay,
on a message
running
to
a
him.
business. Uh,
Yeah, because he's not been able to listen to us.
sir,
I think there's
can
some
you hear me
network
right
issue.
now?
Sai,
Hello.
there's some network issue. Huh? Your voice is breaking.
Sir, can you explain question number 3?
Question number 3.
Yes, sir.
Okay, great. Sure.
Hello.
So let's go to question number 3. Okay, so now in question number 3, I think this was about a startup. Okay, so this was about a company, and the company had a product. So what was the product? They will deal with the solutions related to problem of paddy stubble burning. Yeah, which is, you can say, a solution which will be offered to the farmers. Yeah, so this was the solution which the company was working. Now, government also had a lot of focus on this. Yeah, because to avoid pollution, so government said, yes, of course, this needs to be stressed upon, and that's why, as around this objective, various other companies have also entered into the market in the past few years. Now, many of the companies who have entered the market as around this particular solution, some of them were successful, some of them were not successful. Now, in this case, you are required to comment as an auditor what type of risk of material misstatement is involved. Now, please remember, the question specified component of risk of material misstatement, which means it can either be inherent or it can be controlled. Yeah, so that's the question. Clear, Vaishnavi?
Yes, sir.
All right, great. Okay, I think Aditi, you have a question. Yes, Aditi.
Hello, sir. Sir, how would we recognize whether we need to further classify audit risk or not?
So it will be asked for in the question. So let's suppose this question is there in front of you. So what is this question asking you? You need to comment on the component of risk of material mistake, which means you need to specify inherent or control. Okay, as against this question. So this question asks you state the risk mentioned in the question. So can you see the difference?
Yes, sir.
Understood?
Yes, sir. Thank you.
Sure.
Sir,
Yes.
sir, as you said, risk of material misstatement may exist at two levels.
Right.
Like financial statements are full of assertions. So assertion level means within one transaction itself, right?
Yes.
So what is the difference between financial statement level and assertion level? Like financial statements also include assertions, right?
Right. Sure. So let's understand this with the help of an example. Say you have a financial statement. Okay. In the financial statement, the turnover of the company, let's assume, is 50 crore. Okay. And there are a lot of line items in the balance sheet. PP is there, borrowings are there, various other items are there in the financial statements. If let's suppose during the year, revenue was understated by 2 crore, will you call that as an error in revenue recognition? Tell me, will you call that as an error in the revenue recognition? I'm just hoping you are with me.
Yes, sir.
Yeah. And does it relate to a particular line item in the financial statements or the financial statements as a whole?
Particular line item.
Particular line item. So which two items can get impacted? Maybe revenue in the P&L or debtor in the balance sheet. Correct?
Yes.
So this is what you call as an error which is not flowing to the financial statements on an overall basis. As against that, let's suppose there is a company. It's a startup. Okay, and this company currently doesn't have any revenue. They are in the process of setting up a plant. So if you look at their balance sheet, the balance sheet comprises of PPE majorly. Yeah, so let's suppose total size of balance sheet is 30 crore, out of which 25 crore is PPE. Okay. And otherwise there is nothing in the P&L. Yeah, so largely it's PPE. And you find PPE to be materially misstated. PPE is materially misstated. Now in this case, PPE is materially misstated. So does it impact one line item in the financial statements? Tell me.
No, the amount is large, so it
But its impact is such that it flows to the entire set of financial statements. Why? Because it comprises a major chunk of the financial statements. So it is impacting the entire financial statements. So if the PP is wrong, which comprises significant portion of your financial statements, so will you be able to say that other than PP, my financial statements are correct? That will be inappropriate. Why? Because if PP is the significant portion and that is materially misstated, then effectively your financial statements have also got materially misstated. Understood? So that is what you call as an impact or an error, which is flowing to entire set of financial statements.
Yes, sir.
Okay. Similarly, there could be a lot of errors. So let's suppose in the financial statement, you find debtor has an error, loans advances have an error. Okay, inventory has got error, PP has an error, borrowings have an error. In P&L, there are a lot of errors. So there are a lot of errors. So that is also something which you'll say is flowing to the entire set of financial statements. So that's the difference between these two. Clear?
Yes, sir. Thank you.
Sure. All right. So I think if we are done with this, we can just conclude our session. Yeah. And I would please everyone, it's a request, please make sure that you revise whatever we have discussed, because we are going to continue on this topic. So it is extremely important that you revise all of these things that we have discussed. If you keep revising, you will just continue to find all of these things, sort of easier. Some of the comments which I can see. But if you don't revise, then of course you'll find a lot of technicalities. You'll start facing difficulties. So it's very, very important that you revise. Okay. All right. So thanks. So I think we can just close this discussion. So thanks everyone for your time, for your wonderful participation. Ashok, we can close now. Thank you. Good night.